I think the best way to think about that question is to consider the alternatives people have. So you're a normal person and you want to save money for retirement or to give to your kids. So you put it in a savings account, you get 5% interest. The monetary inflation rate is 7 or 8 or 9%. You got a negative real yield of 3%. If you end up with a negative real yield of 3.5%, then over 100 years, $1 million saved is worth $30,000.
Michael Saylor, the executive chairman and co-founder of MicroStrategy, is nothing if not a firm believer in Bitcoin, the world's leading crypto asset by market cap, and its underlying network. Saylor believes Bitcoin is not just the best cryptocurrency offering, but also the only suitable asset for all categories of investors worldwide. And he has proven just that with several multi-million-dollar purchases for his personal portfolio and his business analytics firm. At present, MicroStrategy is the only publicly traded company with over 152,000 Bitcoin on its balance sheet. During a recent discussion with Altcoin Daily, the MicroStrategy executive chairman explains that BlackRock's and Fidelity's spot Bitcoin ETF applications will give institutions a much-needed opportunity to get more involved in Bitcoin and the entire cryptocurrency industry if approved. According to Saylor, this would be really advantageous for institutional investors who have been on the sidelines waiting for the right time to invest in the industry. But institutions are not the only investors that Saylor believes should be massively investing in Bitcoin. When asked why retail investors should also be putting money in Bitcoin at current prices and given the present economic environment, the MicroStrategy executive chairman discusses the other alternatives to Bitcoin and why they aren't considerable alternatives for savvy and serious-minded investors. To begin with, Saylor gives the example of bonds and savings accounts, which, given the steady decline of the dollar and other fiat currencies, promise to do a very poor job of helping people increase or preserve their wealth. The only thing Saylor believes you would get from investing in bonds is losing a large chunk of your wealth due to currency debasement. A similar thing occurs with equities, real estate, and other asset classes, leaving only Bitcoin as the ultimate investment choice for all investors. As we bring you clips from this Saylor masterclass, please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads. Thanks and enjoy the video.
For the average person, saving money in bonds with a 3.5% or 4% interest rate when the currency expands at 7 or 8, that's a losing proposition. You lose 97% of your wealth over the course of 3 generations. So clearly bonds don't work, right? And savings accounts don't work. So the next question is, do I just put all my excess money in the S&P index? Well, traditionally, the money supply in the US is expanding at 7% and the S&P index is going up at 7%. So if you save $1 million over the course of your life and you put it all in the S&P index, then in 100 years, it'll be worth $1 million. So that's wealth preservation, but you're not doing any better than that. And that just kind of assumes that, that the S&P 500 is going to be relevant for 100 years and you can stick around the country. But it's like treading water. The next issue is, well, so what I put in real estate? If you buy real estate, you're an average person. Can you buy a building? Probably not. Can you buy a warehouse? Not easy. Maybe if you're a rich family, you buy warehouses, right? Rich families buy warehouses, city blocks, and buildings, but the middle class person doesn't. So how do you buy $4,000 worth of a building? Can't. Okay. So the issue there is your property rights are inferior when you're buying shares of stock or a security versus the underlying property. If you own the building, you can mortgage the building, sell the building, upgrade the building, build 10 floors above the parking lot that the building has. You can develop the building. When you own a share in a REIT that owns the building, like you own 1/100th of the building, you don't have any of those rights. You can't do anything to the building. You're just along for the ride, getting 1/100th of whatever cash flow the general partner decides to distribute to you. And if they make stupid decisions, you're stuck with them, right? You don't have any property rights. You're inferior in your economic rights. So owning shares of a REIT to get property for 100 years, not a great idea. That leads us to the problem of securities. what is the problem of security? So you have some money, you invest it in Apple stock or Amazon or Facebook or Google or a REIT that owns a building. The dilutive problem with securities is there are risk factors. First of all, there's a management team. They're going to take 1% every year. They're not doing it for free. They're charging you to manage the company or the building, right? And if you're lucky, that's only 1%. You want to see that in action? Just go look at any ETF. The ETFs charge 90 basis points. If you want to put money into a Bitcoin, Bito, or whatever, they'll charge you 90 basis points just as the management fee. So about 1%. What's the cost of 1% over the course of a lifetime? An infinite duration asset, you would basically multiply it by 20, 25. So it means that when I charge you 1% to manage your $1 million, I'm taking 20% of your money. Okay. I'm taking 20% of all your wealth to charge you 1%.
In one of his recent tweets, Saylor shares an interesting chart that tells us exactly why the business executive is so sure of his multi-billion-dollar bet on Bitcoin. The chart shows the returns on various asset classes since 2011, just about 2 years after Bitcoin was created. Of course, Bitcoin leads the pack with an annualized return of 151.3% between 2011 and 2023. The next asset class on the list, the US Nasdaq 100, only had an annualized return of 17.8% in the same period. The really insane part of the chart is Bitcoin's cumulative returns between 2011 and 2023, a whopping 10,412,288%, compared to Nasdaq's 682.3%. For the 15-year period, Bitcoin gave the highest returns in 13 years, failing only in 2014, 2018, and 2022. In the same period, no other asset has given the highest returns twice, not to talk of for 13 years, most of them consecutive. It's no surprise Saylor captioned the chart using the words, "There is no second best financial asset." Let's get back to his interview with Altcoin Daily, as he gives several other reasons why you should own at least one Bitcoin in your lifetime.
So when you run a company, you also have you have the risk of labor, right? Your company may unionize. So you've got labor expenses. And what happens to the equity value when the company unionizes? Well, the union just takes all the profits. And the equity values of those companies start to trend towards zero. So labor is another risk. The third risk is your competitors, right? Your competitor may come up with a better product and you end up like Yahoo squeezed out or AOL squeezed out by Google. Well, then your stock's going to zero, right? I mean, how many companies actually had a competitor? Xerox, Kodak? World's full of great companies. Where are they today? They end up getting squeezed by competition. The fourth issue is technology, right? You may just get obsolesced, right? Maybe you own natural gas fields or oil fields and someone creates nuclear power plants and they don't need your oil anymore. Or maybe you sell the world's greatest chemical cameras and people don't need cameras anymore. They have digital cameras, right? There's always that kind of risk from technology. And then there's execution. Maybe you just don't ship the iPhone 47 to be that good, right? Maybe the iPhone 13 is good and the iPhone 15 is not good, right? And the world's full of examples of that, like Firestone tires or something, and I ship a tire and the tire blows out, and now people stop buying my tire. Or New Coke. Remember New Coke is a product launch that didn't work out well. So when you're investing in a company, you're not just getting a pure investment. You're actually getting an investment in an asset, but you're getting hammered and diluted by force majeure, by bad weather. Yeah, you might get a war. You might get a tariff or a trade war. Like we just decided to put a tariff of 20% on all Chinese imports. Oops. If you had a factory in China, what happened there? And then maybe you get a real war, where someone just impounds your ship or blows up your factory. That happens too. We have real wars all the time. So what's the return on the S&P index? 7% a year. What's the monetary inflation rate? 7%. What's really happening? Well, all these companies, they're just barely holding their wealth. And so what would happen if I got rid of all those risks? What if I could buy a product that was never going to obsolesce, that's good for 1 million years? What if there was no management team and they work for free, right? What if the product is run by computer programs that don't charge a fee? What if there's no labor? What if it's a digital product? So there is no chance to block it via trade war or destroy it via real war. What if it was an indestructible, immortal, incorruptible product? Well, when you buy a Bitcoin, you're buying 1/21 millionth of all the money on the network, or all the money in the world that's ever going to be on that network. Okay, so would you want to own 1/21 millionth of all the money in the world in 10 years, 20 years, 100 years, 1,000 years, 10,000 years? The product's not obsolescing. It's 1/21 millionth of everything. You see, the iPhone will obsolesce. One day you'll be using Apple Vision, or maybe they'll put a telepathic implant in your brain and you won't need phones and you won't need goggles, and maybe you won't need televisions. Those things can obsolesce, but will you want 1/21 millionth of all the energy in the human race? Probably.
Meanwhile, U.S. presidential candidate Robert Kennedy Jr. recently unveiled several plans for Bitcoin that he plans to put in motion if he's elected president of the United States come November 2024. While speaking at an event on Tuesday, Kennedy stated that his administration will make America the global hub of cryptocurrency, particularly Bitcoin, to incentivize greater investment in green and renewable energy production. The presidential hopeful also promised to end Operation Choke Point 2.0, an alleged ongoing effort by regulators and the Biden administration to cut off the cryptocurrency industry from banking services in the United States. Kennedy said he would also be putting strong barriers against the issuance of central bank digital currencies, CBDC, and put plans in motion to back the US dollar with Bitcoin. The presidential candidate, who recently revealed he holds up to $250,000 in Bitcoin, said, "The Kennedy administration will be backing the US dollar with real finite assets such as gold, silver, platinum, and Bitcoin, which is the world's hardest liquid asset, to strengthen the US dollar and guarantee its continued success as the world's reserve currency." What are your thoughts on Saylor's interview and Kennedy's latest campaign promise, especially to have the US dollar backed by Bitcoin and other assets? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.